Your market news now. Asian equities fell in volatile trade after heavy selling on Wall Street late last week as investors increased their forecast for U.S. interest rates following hot inflation data. The hotter than expected data has helped the dollar to strengthen against many of its major peers, sending the dollar index up 0.6% to a 7-week high and putting it on track to post its largest weekly gain since late September. Locally, real estate investment trust Liberty 2 Degrees said it increased foot traffic does help to boost its net property income and its distribution per share in its latest annual results. Despite the stronger results, the company has warned that its headwinds in 2023 would be a challenge, especially for prospects, noting that high inflation, rising interest rates and high levels of unemployment were weighing on disposable income. We also had aluminum company Hulamin expecting its headline earnings to almost half in its 2022 financial year, partly due to a lag in prices between buying and selling metal. Well, we're going to come back to the markets picture, and have you seen there that was the briefing happening in Westbury. But moving back to the markets, I did mention there that Hulamin expecting their headline earnings to be a little bit lower, looking at a drop of between 41% and 49%. However, to give us perspective from a markets side of things, we are joined by Bright Khumalo from Investec Asset Management. Bright, thank you so much for your time this afternoon. Let's look at the Rand performance since the financial watchdog flagged South Africa. We saw the Rand at the time the announcement came out at around 18.49, which was quite different from its open on Friday at 18.24. How are we looking right now, especially from a Rand point of view, as we kick off the week?
Unfortunately, we're still, hovering around that 1842, range. With no reprieve there, because I think this whole grey listing situation is more long term and more embedded than one expects, and it's reflected in the Rand.
Last week Monday we had Gary Boyson giving us his perspective on what grey listing meant for him, especially as they run that asset management business. From your side as Investec Asset Management, are clients asking since Friday, and what have you been saying?
Clients have been asking absolutely nothing, which is the funny part, because I think we all should be zooming in and trying to understand what this means, especially for South Africans that want to take money outside of South Africa. It's going to be slightly harder, but it's still going to be possible. Essentially, being grey listed means that, let's talk about the FATF, which is the Financial Actions Task Force, which was established in 1989. Their whole, spiel basically is to try and counter money laundering, terrorist financing, and proliferation financing. And, it's been about 15 months since, South Africa has been put under watch. And in that period, the good news is that there's been, some, suggestions coming out from the regulator and, from FATF and the regulator, obviously, making those changes, those regulatory changes, on paper. But the hardest part in those 15 months, unfortunately, has been the implementation thereof, regulation, which is part of a bigger problem in South Africa, because we have all of these laws, no one seems to be following them, and this unfortunately falls, in that bracket. In terms of the impact, like I said earlier, it's going to be much harder to send money offshore, because we're going to be treated, with high alert, because they have to ask questions whether this money is not from the three things that I've referred about, which is money laundering, terrorist financing, and proliferation financing. It's going to be very hard, not only just for our local banks on the increased burden of compliance, but the banks that's going to be accepting South African money outside, of the country are going to follow, those stringent, compliance to make sure that the money is clean, for lack of a better word, or to put it, plainly.
Right, so let's talk Murray and Roberts for a bit. I mean, they released an updated trading statement. And you look at this company, which I think it was less than 5 years ago, they were fending off a takeover from a German company called Aton. And at the time, the company was offering 17 Rand per share. It's come a long way from 17 Rand a share as the offer to where it's currently trading right now, 2 Rand 60. Can this company be saved?
They should have taken the offer. That's all I have to say. I don't really know much about Murray and Roberts in the construction sector. It's not what I specialize in. But I mean, I'm not even looking at the share price of Murray and Roberts right now. But it sounds like it was a great offer at the time, and we've already known it's since post 2010 that construction has been not doing so well. So getting an offer of $17 back then, they should have taken it.
Okay, on that note then, let's take things stateside, where the PCE figures came out yesterday, seeming to suggest that perhaps we are going to be seeing another interest rate hike from the Fed. 25 basis points or 50 basis points, where are you heading, given the fact that this number isn't what we were expecting, I guess?
Correct. The number you're talking about for the, personal consumption expenditure price index, it rose by 4.7%. The consensus forecast from all of the economists got it wrong again, which was 4.4%. If you're talking about absolute basis points, the difference, the actual as compared to the consensus, it wasn't that much. But I mean, like you're saying, markets currently are looking at, even if it's a slight inconvenience and bad news, it becomes a really big thing for the market. As we've seen, the markets reversed on Friday to close basically deep in the red in all the three major indices, being the Dow, the S&P 500, and the tech-heavy NASDAQ. I mean, currently, you ask me in terms of where we headed for, rates. Traders are now pricing U.S. rates to peak at 5.4% this year, as compared to around 5% just a month ago. And obviously, this is a moving target, as the acceleration in the federal, preferred inflation gauge, dashed ahead of expectations.
Right, Bright. Unfortunately, we have run out of time, but that was Bright Khumalo from Investec Asset Management. As he noted, just building on that, we've got about 6 Fed presidents giving announcements, or rather speeches, during the course of this week, and we will be monitoring in terms of what they're seeing in terms of the pace of interest rates, as well as where they see inflation going. However, that is it for me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.